G'day guys. G'day, welcome to my video post. Just a quick update and doing a comparison to 2017. There is a bit of confusion, as you know, with this structure. Is it a accumulation? Is it a bear flag, and so on? Based on the RSI on the daily, we did drop the 50% level on the RSI, which tends to say it's a changing trend. Okay, so whenever we finish past this RSI on the daily, on the 50%, it's usually a short-term downtrend or short-term uptrend. Either way, short-term, it could be a long-term if you want. So here we had a bit of confusion because it's going up and down, but eventually we hit our mark, and with this RSI pretty much aligned with this structure, we have resistance and we break the 50%, and now we are looking for potentially a deeper drop to the bottom of this, where it's about 30%. Now looking at this, I'm going to come back to it. Let's go back to 2017 and use this as an example. What we had in comparison, we had an all-time high. We capitulated, found a bounce, we had a double top, and this Bollinger Band does a good job in that sense. And if we were to add a few Fibonacci's as well, you can see how certain fib levels come into play. And so this was a dead cat bounce to the 0.5. But anyway, I'm getting off track. If this is a similar structure, you can see how we had higher lows and eventually we break through. And once we break that 50% level, like this one here, we had it, so from there, we dropped and eventually we broke, and this I think it's around here, that dropped the 50% level on the RSI on the daily, and then what we had is more momentum to the downside and some bullish divergence before we made a bounce, and you can see this play out. And what looks like another bottoming taking effect. However, as you know, it capitulated to another level. So this could be deceptive. And if we go back to the current time frame, you can see that the moment we break this trend line, it did drop to the bottom of the initial selling climax point. And so we will expect a good bounce. And if we get the 0.5, which is usually a dead cat bounce, and further down, we're in trouble. And this structure pretty much complements the bearish continuation pattern from top down. So what we call this is a bear market, or you can say it's a major correction. And if we were to use our Fibonacci, from this we can go from the swing high potentially to the swing low, and if we move it across, we can just use our Fibonacci's, and 0.618, the golden ratio, is roughly where it landed. Okay, so let's go. So we're looking from a bearish perspective, and so far a lot of things do point forward. So yep, 50% drop. We have a similar. A lot of people tend to draw this line like that. Now I'm thinking it's potentially like that. That sort of explains the resistance. But if we were to have the debate that, okay, this is the way, similar to the other one, so if we were to drop this, I would expect that this will come down to this capitulation point, which is about 33k, and then we are to potentially have another rally and continue on, and maybe another capitulation, and maybe this is the level there, 30k, and hold on, let's do the same. Okay, that's pretty much it. So if we were to assume that it does bounce, do our 0.5, yep, there it is there, and then if we see something like that, we are looking at something similar to this taking place. Now looking at this chart, you can see our price hit the top of the Bollinger Band, and in some cases on the bottom it's usually a reversal, and at this point the RSI is not as deep as it should be, but you can see that if we put points, it's already looking for the daily to be lower. I would say that this will take a bit of while, who knows how long, but we've got the SP 500 and the US dollar going up, or the US dollar going up and SP 500 dropping. This is correlating, and I would expect that this will drop, and I would expect that if it drops to this point or even further to that point, then we will be looking for a bounce, and if we'll in somewhere between these two levels will potentially be a shorting opportunity. And what it does is, if there's no bulls, it's just going to fizzle away and maybe then go up. But I think it's going to do what it did in the past, a capitulation again, and maybe it's even the one, which is about 22k, 23k. I'm thinking that's the target, because that's where the CME gap is. And anyway, this is the bearish scenario. And in most cases, you want to see the RSI. We had it once, and at the moment, we might have to revisit this bottom again for another bounce of significance. I'll wrap it up there. Note the 200 daily moving average is also playing resistance as well. So we're on the 200 daily, which is also bearish. All right, I'm wrapping up at that, and please give me a like and a tick and share, and I'll talk to you soon. Cheers.